Hi, I'm Sanjay. I'm Associate Director in SPR and Co Chartered Accountants. Today we will be discussing something about fraud risk management. What is a fraud? Fraud is nothing, it's basically not just a theft or loss of money. It is much more than that. It is affecting your reputation of your company. It is losing the trust of the customers, losing the trust of your employees, and it can also have adverse effect on your brand and image. What are the different frauds that happen in a company? There are financial frauds, there are frauds that are made by employees, there are frauds that happen during payments, and there are frauds that are done by customers. There are a number of things that companies do to prevent fraud. Number one, to have a strong internal policies. Internal policies meaning that internal controls in the company, for example, segregation of duty, having proper authorizations, having payment authorizations, ensuring that there is no SOD conflict in place. Number two would be providing training to employees, on the job training, and having a handbook, company handbook, having the code of ethics of the company and policies of the company, ensuring that employees abide by it. Number three would be having a strong whistleblower policy where the employees must have the freedom to report any suspected fraud, and there should be no fear of retaliation from any individuals. Number four would be monitoring transactions which are suspicious. The company must have data analytics and tools present to ensure that any anomalies is detected and any suspected transaction shall be monitored. Fraud risk management program must have 5 important principles. Number one, establishing a fraud risk governance policy where the roles and responsibilities of individuals are assigned and all the employees are aware of what their key roles are. Number two, perform risk assessments. A company must perform risk assessment. For example, they must know what are the likelihoods of this risk, what are the vulnerabilities, and how to mitigate from these risks. Number three, designing and deploying a fraud prevention and detection control activity. In this principle, the company should implement strong controls in place. For example, performing a background verification on employees or monitoring suspicious transactions. Number four, conducting a fraud investigation. Whenever there is a suspicion of a fraud, there must be a thorough investigation and examination of the records to ensure that the fraud is mitigated. Number five, monitoring and evaluating the fraud risk management. Just by creating a fraud risk governance policy, we don't end the objective there. We need to keep monitoring the policy. We need to ensure that the effectiveness of the policy is maintained. A company must follow the following things to ensure the risk is mitigated. Number one, creating a culture of transparency and honesty among the employees within the organization. Number two, ensuring the employees training on reporting suspicious transaction and fraud. Number three, ensuring the company is up to date on fraud trends and latest technologies. Number four, to have enough data, tools and technologies to suspect frauds or suspect any anomalies in transactions. By following the above principles, the fraud cannot be eliminated. However, it can be mitigated.